Good morning everybody and welcome to this European session on Thursday the 5th of September. Hope you are all well, ready to dive into the market and see out this week where we are now approaching some of the higher impact news announcements for the week, and this becomes very important, especially because they're US dollar based news announcements, and that's where the majority of the flows and the trends have been. So let's dive in, have a look at those key economic news announcements coming up and highlight some potential trading opportunities from the London and Sydney trading floors inside of Smart Charts. So first of all, today we have the US ADP Non-Farm Employment change release at 1:15 p.m. British summer time, UK time. Although it certainly doesn't feel like summer right now, okay? Now, usually this report is actually released on a Wednesday, but because there was a US bank holiday on Monday, it's actually been delayed one day. And the ADP basically estimates the change in the number of employed people during the previous month, excluding the farming industry and governments. It provides an early look at employment growth ahead of the government-released employment data, the US non-farm payroll report, which is usually released 2 days later on the Friday. In this instance, it's going to be tomorrow, 1 day later. Job creation is a leading indicator of consumer spending, which accounts for the majority of overall economic activity. And what the ADP does is it analyzes payroll data from more than 25 million workers to estimate employment growth, and the forecast is for 144,000 new jobs. Now, this becomes quite important, okay? Not what the announcement is. We can't predict what's going to happen on the news announcement, okay? And we can't suddenly react, okay, and beat the algorithms who are taking trades within nanoseconds and readjusting portfolios. But what we're interested in, as we have been highlighting through these different webinars, is any surprises, okay? Are there any surprises from what the market was expecting? Because if there are, that's what causes really big moves in a short period of time, as everyone scrambles to readjust their positions. And then we want to trade the follow through that develops afterwards, all right? And if you have been tuning in over the past several weeks, we've had a few different news announcements come out. Majority of them have been expected, which is why the volatility market has been a bit lower. All the news announcements, no real surprises. Everyone's been building positions in anticipation of certain things, and the news announcement comes out, it hasn't really had much of a difference. It's really only last week before, we had a really big surprise in the New Zealand business outlook, which surged to a 10-year high, which no one was expecting, which caused that massive rally in the New Zealand dollar and actually helped a lot of our trades, Aussie Kiwi, Pound Kiwi, Euro Kiwi, all to the downside to capitalize on that New Zealand dollar strength. All right. So that's the kind of situation we're looking for. So let's see if we do get any surprises in the US economic data, and then if there's any follow through to sort of trade that. Now, we also have the US ISM Services PMI release at 3 p.m. UK time. And this is basically an index from the Institute for Supply Management that surveys 300 purchasing managers, excluding the manufacturing industry. And respondents are asked to rate the level of business conditions, including employment, new orders, prices, production, inventories. And it's a leading indicator of economic health as businesses react quickly to market conditions, with purchasing managers really at the forefront. And the forecast is for 51.3, which anything above a 50, okay, highlights an expansion, okay, an expansion in the economy. Anything below the 50 highlights a contracting economy. Now, US economic data does become quite important because we already know that the markets are already expecting an interest rate cut from the Federal Reserve later on this month. That's already been priced in. That's why the US dollar has been crashing lower and giving us those beautiful trends in the US dollar pairs. But now the question becomes quite interesting, because now there's a 40% chance, or the market is implying a 40% chance, that actually the Federal Reserve could surprise the market and actually cut interest rates larger than what is everyone expecting, a 50 basis point interest rate cut. So whilst everything is priced in, there's now a bit more uncertainty on how big the interest rate cut could be. And of course, US economic data will become very important in making those justifications. So if we start to see the data cause these big moves in the market as everyone's sort of readjusting their portfolios, we could see a bigger move in the US dollar, as everyone then will dump the US dollar even more on an expected interest rate cut that is larger than everyone is expecting. So again, we don't want to try to predict what's going to happen here. We don't want to try to guess what's going to happen here. We want to analyze flow. How does the market respond, and do we get the follow through, right? Because the follow through, that's going to be really high probability trading, because it's a fundamentally led narrative on why everyone is buying or selling. People are adjusting their portfolios to realign themselves with what's happening in the economy. So we'll keep an eye out on those type of flows over these next few days. I will try to highlight different opportunities to participate in, but make sure you're tuning into the live trading webinars every day to also identify and participate in those trading opportunities as well with the other traders in smart charts. Let's now dive into smart charts and have a look at some potential trading opportunities. Okay, so here we are in smart charts, and there's a couple of things that are quite interesting here. So first of all, we've gone straight to the faster time frame, okay? And on the pip runner here, what we can see is that on this 15-minute chart, we have some good agreement with the fast above the slow on the 15, the fast has just crossed above the slow on the 4-hour. So we're starting to get agreement between the algorithmic traders on higher time frame and lower time frames. And what we can also see on this 15-minute chart is that we are starting to produce these cycle formations. These are small cycles because we're dealing in a bit more of a lower volatility situation. But we will be looking for price to continue here and see if we can get price moving higher, and if the trend can continue towards towards the upside as algorithms take control of the market here. So this becomes quite interesting, and not only does smart charts help us to highlight these potential trading opportunities, but also do the really most important work, which is the risk management work. Because by clicking the buy icon here, we'll put an entry price at the blue dot, stop loss at the red dot, target the green dot. These can all be adjusted according to your own user preferences. It'll do the risk management work as well and calculate your stake per pip automatically at a click of a button, which is really important to keep the risk low, to make sure you're able to manage the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And then we like to set a 4-hour expiry here, just to give it a bit of time for buyers to turn up and continue the move. And if they don't, fine. If things just fizzle out, your pending trade expires, you didn't win, you didn't lose, it didn't cost you anything. There's also a couple of things actually going on the higher time frames as well for you higher time frame traders that also are starting to look quite interesting. So here we have Euro Australian on the phase changer, and actually what we're liking here is that we have the same cycle structure that we just saw on the fast time frame pound US, but now we just have it on the other side on a different currency pair on a different time frame. Because what you can see is price got below these moving averages and it came into the moving average where sellers turned up and drove it lower, and now we're back to the moving average where sellers have actually turned up here before. So we'll be looking for clues on whether or not sellers are actually going to turn up here again and continue driving this market in a trend. So on top of what Smart Charts has found, we have this higher level of confluence, okay, from the moving averages, and we also have these lows here. So we have this support level from these lows, and price has actually broken through it, and maybe we could be finding some resistance here now. So sometimes you get this support resistance switchover, resistance to support switchover. So we have a few confluence levels of confluence here, all kind of around the same area, and it'll be interesting to see if sellers do decide to turn up here, continue driving this market lower. And the Aussie could be supported because we have had news announcements earlier in the week from different members of the Reserve Bank of Australia saying that they're not likely to cut interest rates in their next meeting. So this becomes interesting, could provide a bit of stability in the Aussie. And we know the European Central Bank are expected to cut interest rates, so maybe traders will start to position themselves for that. Okay, so in this instance, technically we have a confluence of levels, and so let's see if sellers do turn up. So again, Smart Charts not only helps to highlight those potential opportunities, but also do the risk management work as well, because by clicking the sell icon, it will put an entry price at the blue dot, stop loss at the red dot, target the green dot, which can all be adjusted according to your own user preferences. It will do the risk management calculations for you. Important to keep that risk low to make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And then on the daily chart, we'd like to set this current bar close expiry, which basically means that, look, if sellers don't turn up by the end of this daily bar, so by the end of the day, your pending trade will expire. Didn't win, didn't lose, it cost you anything, no one turned up. But if they do decide to turn up, then either it goes to your target level or your stop loss level, all right? So a couple of things to keep an eye out on there, okay? And it's make sure you're mindful of those high impact news announcements coming out. Risk management is important, especially because they're US dollar news announcements, and you might already have some US dollar trades running live if you have been trading this week. So don't overexpose yourself. If you've really got a couple of dollar trades running, then that's fine. You don't need to take more dollar trades and start just increasing the risk on your account on just the US dollar. Okay, you want to diversify that risk across different currencies, different asset classes, lots of good things happening in stock market, stock indices. So just make sure you're managing that risk appropriately. Okay, of course, if you need more guidance on risk management, portfolio management, make sure you're booking your coaching sessions, speak to your coach about that, or log into the live daily trading webinars, speak to one of the traders and, you know, work with them every single day and see how they risk manage and start building up that knowledge and experience for yourself as well. That's it from me. All the best for your trading. Bye for now.